Hello and welcome to today's tutorial from To the Tick, and our topic is the triple bottom. Now, triple bottom is a reversal pattern. Visually, they represent the changing of the control of trend from the first opportunity that you might see it until it actually confirms and everybody can see it. You're looking for a pattern of price flow to actually make a reverse. They won't all look the same, but we're going to go through the structure of a textbook perfect looking reversal pattern in a speedy bar by bar sequence here in order to get things started as if we would watch it in live time. So first and foremost, in order to have a reversal, you must have something to reverse. In the case of a triple bottom, we're looking at a bearish trending action that hits a swing low and the selling stops. It doesn't mean that they're through going that direction. It doesn't mean that we're through going down whatsoever. It just means that there's enough buying interest to stop the decline in price. And that is the basic definition of support. We then get a bounce in price and it swings up to a point of which now we can say swing one low, swing high one, and we can box this out and look at this as a potential, what I call my reversal box. Now my reversal box gets started from the very beginning, swing low one and swing high one, and then I look for the muddy trench. That's what I call the area here that's in bright red dots. Now it's not an exact price point down to a tick, but it sometimes does get that way, but it's basically the area where there's a tug of war going on between buyers and sellers. And I want to see the activity in that zone every approach through it. Now I get to use that as an intermediate target if I'm trying to trade to it from either one of the long sides, either taking a long trade on the bottom or a short trade on the top of my box. I can use it as an interim target, but it's also a message of confirmation in who's in control. During this swing, the bulls managed to maintain control. First, they push through there, they run into resistance, and there's a pullback that holds. So for me, this area now denotes where the buyers and selling is willing to take profits, willing to get long, willing to get short, willing to cover, and that's what I'm looking for. Now, basically, at this point in time, you have no confirmation whatsoever that the down move is through. So this first swing high is still a beautiful trend trade to join that downtrending action, trend trade to go short using the double bottom as a target. Again, you'll have to watch the intermediate area in the muddy trench zone to see if the bears can manage to push back through there, but the idea is there's still sellers looking to take profits and they want to get under that line again. So can we at least try to make an effort to a double bottom? And a double bottom means two, right? We're working on a pattern that is a triple. The structure so far is exactly the same. Quite often the triples are nothing more than an extension on a double bottom. Whether the double bottom actually works or it fails in the process, sometimes that's the case, but in general, you can't get to a triple until you've had the double. Right? So let's go ahead and advance and see what's happening with our points, and realize also that our rectangle here has not only given us a muddy trench, it's outlined a swing high and swing low where we can use for targeting, but it's also told us this is the line in the sand that we need to get the breakout. We do not get a confirmation of a triple bottom reversal until there is a breakout that holds. So we have to have a significant enough breakout to actually hold, and then we're going to take that target and add another whole box. That's what the red bar is here on the right. It's the target, and we're looking for a box on top of a box. So a duplication of whatever happened in our swing high, swing low. And isn't it nice that it's already been established for us? Now we can sit back and wait and just say, okay, here's the second approach into the bottom of my box. Prove it. Prove it. Either you're going to hold support or the bears are going to overtake you. one or the other. So we're looking at volume for clues. What happens when we come back to the box? And again, I'm not worried about the exact number. I'm looking at this as a zone and watching them weave back and forth, knowing that a trending action, what I saw in the background, does not change immediately very often. And I can see already that it hasn't been able to this second time. So now we've made another swing. We made that effort through the muddy trench. Again, the muddy trench gets touched on every bar. And the push is, okay, can we get the breakout? So for a double bottom, we would be looking for the target to break out here right where our big question mark is. A double bottom is looking for the breakout at this point after number 2. So does it happen or does it not? Picture perfect triple bottom, no, it does not. They are not ready yet, and the bears step in and push it hard back all the way down in the bottom. There is a clue in that message. The fact that they pushed it so hard through here. Quite often by the time you get to the number 3, the volume activity in here is showing you a decreasing interest, decreasing interest, decreasing interest. And yet it's about, can they stop the decline of prices? Can you see the buyers nibbling, nibbling, nibbling? And if so, did they give you this big thrust right here as a third push is the charm, and it either lets go and the bears take over, same thing I said on number 2, or we're going to work the muddy trench again, and maybe this time we can get the breakout. On the bottom effort, you're looking for buyers. The price cannot advance without buyers. They can sell, and as long as there's buyers that are willing to soak them up, that's a good thing. Coming back to the muddy trench again, more opportunity. Again, a picture before you get to the breakout. Once it's broken out, it comes back and says, let's retest, let's prove that we can hold it. Now you've confirmed once it holds that breakout. And there's your target. Now, let's talk about what the terminologies. We talk about the top of that rectangle. Most technicians call that a neckline. It is a breakout of resistance. It is the immediate resistance within your rectangle. The rectangle itself denotes a reversal pattern. It may take several swings on both sides. Most of your instruments has a symmetry within themselves, so that if you'll take whatever instrument you're wanting to trade and look at it in multiple time frames and look for whether they get to these major areas of support and resistance, and do they take 2 efforts, 3 efforts, 4 efforts? How many efforts does it take? And what you're trying to see is the duel between buyers and sellers. And when do they finally run out of gas on whatever side of that picture? And it's going to come from that muddy trench, that middle battleground area during the pattern. They got through it, they got to it, they got through it, they got to it. How many times and touches do you get there? And yet, how much confidence can you have that the elephants cannot hide what they're doing on that line? You can see it. And again, we don't get the confirmation till we get the real breakout. So let's talk about trader options and trading this. And the number 1 most aggressive option is to try to be looking for the trade on the third push, and often a third time is truly a charm. It either works hard one way or the other. So if it's coming long, again, confirmation in the muddy trench, and that is trader option number 2. I have never seen it written in a textbook, but that is the LAV method, and that option is work the muddy trench. Once you see that the bulls are firmly in control of that trench and that price is going to make it through there, take your trade long. Still giving you less risk than what this option does down here, because you can see number 3 completed, but it does still give you a nice entry before the breakout, which brings me to classic, is take it on the breakout. Take the trade on the breakout, and or my least favorite, wait until you actually get the confirmation, is a much nicer trade in my view than the breakout trade. Look for that confirmation. The only problem is often that fourth option doesn't happen. But when you do get that pullback after that initial breakout, it has a very high odds statistical basis to be able to give you good money. And we're talking about all four of these entry options have the same target, and that is to repeat the size of your rectangle. So let's go and look at one, because I'd like for you to see an example where the triples are literally just an extension of the doubles. So this is an example of a double bottom. We came in, obviously, the bearish background, and we won't work on all these little nuances. This is found on our website as one of my examples for this subject today, and one of two. And it's a double bottom play, and the double bottom is different in the sense that it's a smaller little pattern in here than the triple. The triple bottom is in the red, the double is in gray. So the double actually gives you a signal to take the double bottom long. You take the trade, you fight the muddy trench, which in this case is gray, double bottom gray, everything about the double bottom's gray. The muddy trench gives you the push up, and yes, it does get the breakout. But it's really kind of a failed breakout. Now, the person that took the trade down on the bottom, most aggressive, they made money. The person that took it in the muddy trench, they made money. And they actually made enough money to make the entire size of the pattern, taking it from those better spots. But anybody else, the breakout on the line or the break and trying to take it afterwards, they did not make much money. Now, did they get a chance to clearly see that their trade wasn't going anywhere and it was going to be a failed breakout and it rolled back down? Yes. What did the volume show you? A great big thrust, and price couldn't go anywhere. Big clue. They weren't through with the pattern yet. Happens a lot, okay? Double bottoms turning into triples. A lot of times it's because there's not enough money yet in your reverse in order to get the big elephants involved. So we watch for when the elephants truly step in, and if you notice, check these buyers stepping in over here on this part of the pattern. I call this a dump and run right here, this activity on a muddy trench. And in this example, I tell you what that's about on the website. So we won't go into it right now. But again, you've gotten your full mission out of this price, and that the third actually gave a lot more money than the double. So threes are not a bad thing at all in the market. So let's do a little summation here on our triple bottom and realize that we have to have a background, and our reference point is a bearish trending background activity before we even think about a reversal. Our first push into the new low is where buyers step in. That's our definition of true support. And we take a pause and we watch that volume activity as they make their bounce up to a swing high. How much are they doing? Buying to cover, establish your muddy trench within that early swing one high, swing one low. It's the reverse rectangle, and you're going to use that as a repeated target. Then on every one of your entries, on all your options, your stop limit is just under that option. And number one, again, most aggressive, working the triple bottom swing low price area for an entry. Whatever you want to use for confirmation, you're looking for the bulls to really show you some aggressive buying pressure there. Then number two effort, labs on the muddy trench. We're watching that third low get taken out and coming back inside, working the muddy trench. When do the bulls take control? Once they do, jump all over it. Number three, the classic, take it once with the breakout. My least favorite, but you're working the swing high price area, and that's why I don't like it. Number four, this one I like a lot if you can get it. Get that retest back on that breakout price area and run for your target being the box, the repeat of the box. Now, this being a great big pattern, if you do get a big reversal out of it, you will have trailing opportunities for the pattern. But it was about identifying the reversal itself and not really working it all the way to that full potential quite yet. So thank you very much. This has been brought to you by tothetick.com/edu today. We've been talking about the triple bottom reversal patterns, and the video and text description and all the chart examples are all on the website. Thank you very much for joining us, and I'll see you again soon.